The perfect M&A deal is probably unconditional in terms of, we know absolutely worst case scenario, we're getting the current offer that's on the table. And obviously we'd like an improvement beyond those terms, but knowing that you have an absolutely firm bid that no matter what, you're able to accept is probably the holy grail of transactions. But not a lot of them end up, looking like that, certainly from the outset. Then it's a matter of, well, what's a fairly perfect M&A deal? So things like, we want the offer to be binding. So a non-binding conditional approach, with an indicative price is not particularly attractive because there are too many ways for the deal to fall over. A binding offer that isn't subject to due diligence, that isn't subject to funding, that doesn't have a market out clause in the event that the market should fall. We'd prefer the bid in cash because obviously it has fixed value as opposed to a scrip bid, which can have variable value. Ideally, no ACCC or FIRB concerns that can become fairly politicised in depending on the individual stock. So that's not something that we would typically prefer. Credible bidders. Has the bidder completed other transactions before? In terms of the target themselves, who are the shareholders? Are they likely to accept the bid? Are there other players that either on the register or just in the industry broadly who may be interested? So it's really trying to initially protect the downside. So what's the chances that this deal doesn't at least complete in its current form? And then it's a matter of, well, what are the chances that the terms might actually improve and we can make some more money here? It doesn't tick all of our boxes for M&A, but I guess it's topical at the moment. The Nine Fairfax transaction, I think, the problem for Nine with a scrip bid is that the Nine stock has sold off a little bit, which means the implied value of the Fairfax bid is not quite as high as it was when the transaction was announced. I think that at current levels for Fairfax, it's not crazy to think that there might be an improved bid either from Nine themselves or from someone else. We have a position in Gateway at the moment. GTY is the ASX code. They're actually subject to effectively a two-way bidding war at the moment that has had a couple of improvements already. Neither of those has been a knockout bid as yet, so I think that there's definitely potential there that might be improved upon. Investor Office, IOF, we're in at the moment. I think there's a chance that could be sweetened a little bit to help get the transaction over the line. So they're probably three reasonably high-profile stocks that I think is there's a good chance in each instance that they get bumped at some point.